Welcome to the Sporting Crypto podcast, where we talk to leaders in sports and Web3. Joined today by Will Martin, CEO of LiveDuel. How are you doing, Will?
Yeah, all good here, Pet. Great to have me on the show. Thank you very much.
It is great to have you on the show. A long time coming, and we met a long time ago when you were going through the Techstars Web3 Accelerator, and we've kept in touch ever since. So shout out those guys and Pete Townsend. I know he's just left that venture, but he did a cracking job, and you guys were one of the teams that I kept in contact with from that period of being a mentor. Why don't you tell us a little bit about your background and journey as an entrepreneur first, before we go into what LiveDuel exactly is?
Yeah, absolutely. I guess there's a long journey there, and essentially it's all been like collecting little pieces of the puzzle that's kind of landed me here in this spot talking about prediction markets. So I did economics and computer science way back when in university. Always been obsessed with sports and kind of markets, prediction markets, stock markets was probably the first thing that kind of caught my eye as a youngster, that I was just fascinated by the numbers and things going up one day, things going down the other day. So I was kind of fascinated from that kind of point of view. In first year economics, kind of learned about arbitrage. So I decided to do a project on doing arbitrage on sports betting. So that's kind of a huge kind of little base layer of why I'm building LiveDuel and kind of going down the prediction market world. So a few kind of takeaways there. Prediction markets and betting markets are really, really inefficient. There's thousands of operators all selling the same thing. Whereas when I left university, I was working in the kind of prop trading, algorithmic based trading on futures. And that was very, very different. Saw millions and hundreds of millions of liquidity get matched in milliseconds. Whereas if you look at sports betting, it's a much slower market. But there's so many different operators out there that you could have, 20 different prices across 100 different books for the same thing. So that's kind of one of the foundational layers to I guess my kind of background. Leaving college and going into the prop trading world as well was kind of fascinating. But another kind of bit of the puzzle as well, after I left the prop trading world, went back to the master's, studied in Barcelona, Taiwan, and San Francisco, which was probably one of the best years and a half of my life. Feels like a lifetime ago at this stage, but ended up in San Francisco working on Beats by Dre on the product marketing team. So taking what was a very commoditized product like headphones, they all looked the same back then. The differentiation that Beats kind of brought to the market across the product, the pricing, the look, the feel. When you picked them up, they felt weighty. And obviously they used endorsements, celebrities like Dre with his name actually on it, but then athletes like Michael Phelps and Neymar kind of using it. So seeing how you can put something into the zeitgeist to make it the number one product that everyone must have, even if it is a commoditized product. So that's kind of the bits of the puzzle that I've kind of unlocked or been picking up from my career and throughout school and university. That's kind of working its way into LiveDuel and what we're building right now.
And then what about the interest in blockchain, crypto, decentralized technologies? How did that come into play?
Yeah. So once upon a time, I did a financial economics master's. I didn't actually end up completing that because I ended up joining that prop trading firm instead. So this was in 2009. So I probably heard about crypto and Bitcoin before anybody else was hanging out in a lot of forums back then. So I guess I wasn't... Yeah, I didn't buy as much as I should have because it wasn't that easy way back then. But I was just fascinated by, digital currency and just the evolution of how money moved around the world. One of my first ever startups was a mobile payments startup back in the early 2010s. So I was fascinated by how money went from, physical to paper to then to digital, because, we are getting more digital, so why wouldn't our money be digital? So got into it really, really early, kind of watched from the sidelines, but then it was probably 2017, 2018 where I kind of got more and more into it from a perspective builder point of view. But it wasn't until Pete Townsend kind of announced that Techstars Web3 was coming to Ireland that I kind of went, this is the time where I think it'd be really good to try and build stuff, because the technology wasn't quite there as well, because there's still a lot of things that need to be built. But back in the early 2010s, it was really, really hard to actually build something that I thought would be kind of a game changer.
And then why don't you tell us what you're building? Like, what is LiveDuel?
Yeah, so it's a prediction market for sports. So obviously there's a few big players in this space that have kind of gotten a lot of attention over the last while. So, I've been into betting for a long, long time. There's kind of two primary business models there that kind of dominate the industry. Obviously there's the sports book model, the house model that everyone's kind of familiar with, where you're betting against the house and their traders. I was a big fan of betting exchanges like Betfair, Markets, Matchbook, Bettac, but trying to explain how those operated to friends just became a huge roadblock from my perspective of the user experience that they're going out to market with. Betfair is still running ads on TV trying to explain what the lay side of a betting exchange actually does, and that's 25 years after they've launched. So
that is still a market that gets 100 billion volume in 2024, right? In dollars. So it's obviously trying to get bigger than that, but it is still really widely used, even if it's a little bit more complicated than just placing a bet.
Yeah. No, it's absolutely huge, and it's definitely the number one dog. Volumes probably have come down from their peak. Obviously, there's more competitors there. There's a lot more of the traditional kind of sports books after coming into the space as well. So essentially, we love both models, and there's parts of both of those models that work. So we're trying to kind of position ourselves almost like a hybrid in the middle. So we look more like a sports book, cleaner interface, easier to use, home team, away team draw for a football match or a soccer match. Whereas that same soccer match on a betting exchange would have 18 prices on display. So the buy and sell side, home team, away team draw, and then it will show more of a full kind of order book. So information overload is probably the nicest way you could possibly say it to newcomers to a product like that, or even the recreational sports fan. They just want to press one button. You're probably betting on Arsenal to win whatever their opening game of the year this is coming up. So that's kind of more on the user experience side, on the front end side. And then, on the kind of structure of what we're building. So betting exchanges are peer-to-peer, and I think people often misconstrue that for fan v fan. It's not really fan v fan. It's fan versus market makers, which are professional operations. There's probably 4, 5, or 6 big ones in the world, and they have teams of quants, traders, algorithms that are basically taking the other side of your bet. So it's not this social kind of mecca. It's very sharp money against end users, whereas our kind of model is liquidity pool. So people staking money into a liquidity pool, and then we use that to facilitate trades. So people have a great user experience where they get their bet on or their prediction on as quickly as possible. They're not waiting for someone on the other side to offer the odds that they want. And it's a blind pool, so it's not someone dictating terms on the other side. That's kind of all managed kind of by LiveDuel and by our automatic market maker, which we can kind of dive into as well, because that's probably where some of the technical kind of innovation kind of comes from what we're doing.
Before we kind of get into a little bit more of the nuanced conversation around prediction markets, you mentioned market makers there, PvP. What is PvP? What PvP is and what isn't? Why blockchain? Like, why do smart contracts and on-chain exchanges or bookmakers make sense?
We didn't design LiveDuel initially to be blockchain-based or smart contract-based. The initial kind of hypothesis that we had was from that user experience kind of perspective. If you look back, betting has been around forever. If you ever watch Peaky Blinders, there's a few episodes where they're writing up on chalkboards what the odds are for different football matches. And that kind of grid pattern is kind of stuck around to this day. So it went from chalkboards to the paper dockets and to app interfaces. So that was really the initial kind of starting point where we said people want better. Like Robinhood had this kind of huge breakout moment of taking a boring retail stock trading app and actually making it into something that millennials and Gen Z thought was really, really engaging. So that was the initial kind of point of differentiation that we wanted to come about with. But then once we kind of started looking into the liquidity side, that's where blockchain made more and more sense. So initially, we kind of reached out to different betting exchanges to see if we could tap into their liquidity to populate our markets. But the business model just didn't make sense. So the more we looked at, decentralized finance, the big promise there is removing the middleman from the world of finance. We're trying to remove the middleman from the world of sports. So it made a lot of sense of the different innovations that were coming out of there. The liquidity pools, there's a kind of a natural cap on the size of the liquidity available on the betting exchanges because there is a lot of power consolidated into 4 or 5 big market makers. So getting scale beyond that is next to impossible. Whereas we think there's a big opportunity for more casual fans that don't have the time, money, and resources to be professional market makers, but may have spare cash that they want to, put to work, help them earn transaction fees. And then the smart contract side of things, really opens up, different products. And we can talk about those in the future. I don't want to stray too much for the topic, but we can't just keep using, legacy technology and start adding on all the bells and whistles as more things come around. We're getting more digital as a society, so our technology stack needs to be more digital, and our money is a fundamental part of that. So having the smart contracts and the liquidity pools kind of gives us that kind of new base level on which we can build new and exciting products.
And so part of that is decentralizing the market maker model in the same way that you decentralized a cloud server or compute to many different people rather than just one. And so that's part of the proposition.
Yeah, 100%.
When it comes to, smart contracts, executing payouts and stuff like that, presumably a lot of this stuff allows you to offer more competitive odds or odds that take a smaller margin from their customers. Is that something where you can kind of like eat away? Obviously, you can't provide the same liquidity as a bigger sportsbook or a market maker or an exchange, but you might be able to offer better prices.
Yeah. No, and we kind of do have that kind of line to kind of tread, because you kind of mentioned something interesting, but you might not have the liquidity to offer like some of the big boys have. So we need to kind of find this kind of balance of being able to attract enough liquidity by having a high enough margin to pay back those people, those liquidity providers, versus the margin that end users are kind of paying. So our business model is a transaction fee model. So we charge 4% per transaction, and then we split that between the various different operators on the platform. So the liquidity providers will take up a big chunk of that. Platform will obviously take a fee as well to make sure that we can service everything. And then if there's content creators or live streamers that are sending traffic, they'll pick up a portion of the transaction fees as well. So we do need to reserve a portion of the pie to incentivize and get everybody in alignment, because our big goal here is to build the biggest liquidity pool we possibly can. I kind of mentioned at the start, there's 5,000, 10,000 different sports books out there. That fractured liquidity gives rise to this terrible experience where end users pay very high fees, whether they know they're paying fees or not. It consolidates power into certain market makers' hands, and then ultimately the sports betting platforms themselves can ban or limit people. There was a pretty big scandal a few weeks ago where they had to make a few big payouts, then they changed their rules so that wouldn't happen again. So we really have to kind of walk this kind of tightrope of charging enough of a fee so we can incentivize all those actors that we need onto the platform. And getting liquidity is kind of the first and primary goal, really, because if we don't have that, then there's nothing for end users to kind of play around with. And then kind of balancing that then with the tighter spreads. So users have a better place to bet. So as soon as we kind of grow and scale, our fees can kind of come down in lockstep. So we can have that kind of tighter margin, but we're not necessarily trying to compete on price straight out of the blocks, because it would be really difficult for us to do that with small volumes.
Very interesting. And I suppose the elements of decentralized finance, DeFi, as the kids call it, when you kind of start intersecting that with betting, exchanges, whatever it may be, a lot of the examples we've seen so far are what people have termed GambleFi, which I really, I'm not a big fan of. I don't really understand. I don't really, it's kind of a race to the bottom if you're just consistently incentivizing people to bet on a platform with a token, whether it be an ecosystem token or whatever it may be. How are you thinking through that side of things? Because I suppose in your in your example, you're allowed to inherit some of the infrastructure from a network in an Avalanche in your respect, where that's a ledger that you can track transactions against, which to some extent means some of the infrastructure you don't have to build, right? You can just kind of like piggyback off that. I did an interview with the CEO of Courtyard, Nico Lejeune, a few weeks back, and I was kind of like, why are you using blockchain? And he was like, well, we could have built an entire marketplace ourselves that tracks the provenance of a card, and it tracks who buys what, and it allows money to exchange hands P2P, or we could just use a public ledger that's already there and it's open source and we can just build on top of it. So is that, from an entrepreneur's perspective, is that something people are really fundamentally missing around blockchain? Like, you don't have to go build your entire stack. It's paid for by validators, and you inherit that security and the provenance and the transfer and ownership and everything that you require.
Yeah, absolutely. We spent a lot of time thinking about how we actually build and architect everything, and there was a bunch of chains that we kind of really had a kind of a close look at. Obviously, we ended up on Avalanche, and some of the recent deals that they've done have really kind of vindicated that decision for us. Them doing stuff with FIFA for the World Cup next year is something that we're really, really excited about, seeing how we can interface with that and see how we can integrate some of those kind of products inside in LiveDuel. What we've had to build is still super technical and complicated, even though we are still, building on top of Avalanche and being able to inherit a lot of the infrastructure that they've built, the interchain messaging, smart contracts, the liquidity pools. Like there's so many different parts of the puzzle, and our whole goal was always to, how do we abstract away as much of this as possible? Because the feeling that I kind of got when we started it in 2022 is a lot of people were really kind of put off by blockchain and wallets and writing down your seed phrase, because it just made people feel like they didn't know what they were doing, or that they needed a PhD to kind of figure out all the different bells and whistles of what they're interfacing with. So yeah, being able to be part of a bigger ecosystem where there's billions in TVL, secures the network, and we can kind of tap into validators. And I think Avalanche have done a really, really good job of late of bringing on really interesting kind of projects. And I think you've probably interviewed a few of us now over the last kind of 6 months or so, particularly in the sports and crypto space, which is really exciting for us. So we've kind of started having those kind of conversations of how we can, come together and start interoperating with each other, bringing LiveDuel data and odds into different experiences, into decentralized social networks, inside of different experiences where people are already talking about where it actually enhances the user experience. So yeah, we could build everything ourselves, but we might be here a long time if we had to build everything from the ground up. So yeah, we're really, really excited about our partnership with Avalanche.
Well, look, we've had a great time talking about LiveDuel and the intricacies of the business in part one. Before we move on to part two to talk other things, we'll take a quick pause here to thank the sponsors that make this podcast possible. This podcast is sponsored by the Hedera Foundation. The most beloved sports brands understand that what fans want is simple, a reason to be passionate. The Hedera Foundation enables brands and fans to share their passion on-chain using the Hedera network, the most used sustainable enterprise-grade DLT for the decentralized economy. This podcast is also supported by Credenza. Credenza harnesses blockchain technology to power a real-time data synchronization platform that transforms customer data ecosystems. They make data more relevant and actionable for sports brands, teams, leagues, and IP. Find out more at credenza3.com. And now back for part two. Will, let's talk about prediction markets a bit more broadly, because that is a big topic right now. And it's certainly a theme that we've been covering on Sporting Crypto over the last 6 months more directly. And I think one of the reasons is that PolyMarket, which is the biggest prediction market out there, more than half of their historical volume is now in sports. Sports is a big part of where they're pointing this product, right? Which makes a ton of sense. Kalshi and Robinhood and Crypto.com are also there. You've also got Myriad Markets. Those are some of the bigger players. A lot of these are using blockchain. Kalshi is the one that's not. But they are still pretty adjacent or joint at the hip to this industry, obviously, like being part of both Crypto.com and Robinhood's offerings. So why have they taken off right now? Like what has been the inflection point for prediction markets? Has it been a simple case of, okay, this is the most liquid place you can bet on a wager on politics, and those users have stayed to then wager on sports? There's another school of thought that, PolyMarket are offshore and maybe are not regulated in the same way. I think that's going to change because they've just acquired a regulated exchange in the US. They still are banned from the UK, for example, and France and a few other territories, but we're presuming that may change down the line. They've kind of taken that more Binance or Uber approach of like break everything in your way, ignore regulation, become too big, and then kind of like acquire licenses and become regulated. I saw the DOJ have actually ceased their investigation in PolyMarket as well recently. Why has this moment been so big? I think Kalshi as well raised $2 billion valuation as well. So talk me through why there's so much excitement.
It's a fascinating thing to kind of watch and be a part of. So they've been around for a few years, but like everything, there's these overnight successes that are years in the making, and Kalshi and PolyMarket are great examples of that. I'd imagine both have been 5 years, if not more, in the making. So I think the US is a particularly interesting and unique landscape. Online sports betting, or betting in general, was pretty much outlawed until 2018. So I guess there's always been betting in the US. It's just how that has manifested has changed rapidly over those last 7 years. So I think you kind of mentioned PolyMarket's offshore, but they did start in the US. So they would have got a slap on the wrist from the CFTC back in 2021, 2022-ish kind of time for being active in the US with a CFTC license. So they've since kind of gone offshore, but they had already kind of started. They took a $5 million fine at that point, but they'd obviously done multiples of that in terms of volume. So I think this kind of looking for truth, seeing truth in the numbers, and prediction markets are great ways of doing that. Obviously, it's not a bulletproof way, because people still are trying to predict the future. So definitely open to interpretation and potential manipulation. So there's probably like a confluence of a few different things kind of happening. Post-pandemic as well, we've kind of moved away from, mainstream media and all this, and people kind of view prediction markets as this kind of holy grail of being able to find the source of truth, that if there's a market with tens or hundreds of millions of volume kind of going through it, the numbers that are kind of coming out of there are deemed to be more true or more valid. And you kind of saw that in the lead up to the US presidential election. News agencies were quoting what the prediction markets were saying and saying, these are what the polls are saying. They're saying 50-50. Actually, the prediction markets are saying 60-40 in Trump's favor, which ultimately was correct, which is, great advertising that, hey, we know more than everybody else. So yeah, they've been really, really clever in going after that market, because it was a really long sales cycle. The US presidential elections feel like they're 2 or 3 years in the making. So they had a great time to be able to build that narrative. Nate Silver joined PolyMarket as well along the way, who's like the guru when it comes to making predictions about US presidential elections. So they just had this kind of media storm, and Trump dominates the airways when it comes to media and reporting and everything like that, and they were able to kind of hitch their wagon to some description with that. And then obviously everything that's kind of happening in technology and content consumption has kind of changed as well in that kind of time frame, which all kind of points in the direction of prediction markets. But for me, it ultimately kind of comes down to, the biggest reason comes down to the regulatory situation in the US. Calci was CFTC regulated, so they could target every single state in the US. PolyMarket started that, kind of got a slap on the wrist and went offshore. But they had this kind of big kind of push and community behind them before that happened. So yeah, it's lots of things happening essentially.
You mentioned the source of truth. We've also seen that PolyMarket is going to be integrated into X, which again is pretty interesting. You talked about how mainstream media news outlets were referring to PolyMarket when they were talking about presidential election. I think it's probably a matter of time historically that you see sports media using partners for this, but it comes to a point where if there is one model which is way more accurate, then you're going to be wanting to represent the most accurate news regardless of that kind of partnership. And I think the X integration is a really interesting one to watch, because I even saw really clever advertising. Actually, I was obviously, being in the UK, don't get to watch any of the NBA games live, or very, very few of them. You kind of watch them in the morning on the highlights reels, and in the corner you have like a PolyMarket percentage chance of winning play by play. So you're watching every bucket and you're like, okay, it's now 18-6 and PolyMarket thinks it's 80% chance the Boston Celtics are going to beat the Lakers, and now it's 66-64, and now it's 64% versus 36 in the third quarter, and so on and so forth. I think that kind of stuff in terms of impacting content consumption in sport and how people view the drama, even if it's not live, is actually kind of interesting, because you're watching this, you don't know the outcome. You're watching the highlights, you don't know the outcome. And you're like, holy shit, if they come back from, an 87% chance of losing, then this is pretty big. So you're kind of anchoring the kind of unscripted drama of sports with numbers, and then you can do it when it's not even live, which is a very interesting marketing push from them, and just generally for prediction markets as well.
Yeah, 100%. It's one of the foundations that we kind of went with as well, that the price you pay on LiveDuel or PolyMarket is from 0 to 1. If it's worth $1, that means it's 100%. It's already happened. 53 cents means it's got a 53% chance of happening. So it's a really interesting way of presenting probabilities, odds, probabilities, all that kind of good stuff. But it also helps that kind of education piece as well. It turns everything into a story and a narrative, because that prices that you saw over that basketball match, that might have been displayed as a fraction. Someone could have been 5-2 and the other team could have been 3-1. If you're talking about US, it's a different kind of odds projection. Could have been plus 150, minus 100. People don't know what those really mean. I'm in sports betting, and I would have to do a little bit of calculation to figure out what that US odds actually means. Whereas that percentage chance of it happening, it's very easy for people to kind of lock into and understand what's going on. And that's kind of one of the plays that we're making as well, is that providing this as a talking point to content creators or live streamers helps them tell the story as well and tell their audience what's going to happen. Because the beauty about sports is that there will be that team who was 87% they're going to lose. Something happens, there's a miracle, they score a goal, and then they score another goal straight from the kickoff, and somehow they've turned it around. And that's what everyone's kind of looking for, be part of those kind of magic moments in sports. I never thought about what you said about watching it kind of after the fact for a late night basketball game that you've missed live, but you still get to kind of participate and see it, how it happens and how it transpired. So it's a really interesting way of bringing people in and being more kind of part of the story, and being able to, for them to be able to gut check, do I think they have an 80% chance of losing here? Or do I think there's a chance here for this underdog to kind of come back and claim victory from the jaws of defeat?
We've talked a little bit about why prediction markets can be good. Where they're edges, where could they have a disadvantage to kind of the traditional model? I mean, I've seen a lot of examples. The famous one is the Zelensky suit, right? Is it that? Where is it him or someone else that's wearing the suit, and everyone's like, that's not a suit?
Yeah, I guess the source of truth is always going to be an interesting one. I don't know if it was Zelensky or someone else, but parlays has always been the big thing everyone's kind of talked about. Even going back to betting exchanges find it really difficult as well to kind of work in a very expected kind of product feature now at this point, especially in recent times, which is parlays stacking multiple predictions or bets together to give yourself those higher odds. So your $10 bet or prediction could be worth tens of thousands, if not more. So that's an area where prediction markets really struggle with. I do think there will be a solution. Then does it come down to what is regulated in the US by the CFTC? Is it just straight markets? Who's going to win, over-unders, spreads, basic markets? Or, everything's just a derivative of everything else. So I guess there's lawyers out there that could really kind of argue that case, that this is just a derivative where I'm taking a kind of a basket of different predictions, putting them together and creating this new derivative product. So or modeled with the kind of pool that allows us to potentially target parlay type markets pretty quickly, because we're not dependent on market makers having to price up the inordinate number of different options and offer prices. Our pool could potentially step in there just the way kind of a sports book would, and match people's parlays. So getting to feature parity for prediction markets is quite tough. In the US, if they get regulated across the board by the Gambling Commission, that also is potential death for a prediction market in the US, because some of the tax rates in the US and license fees are just crazy in terms of their size and volume. So New York's probably about 25 million for a betting license. Tax is 51% gross gaming revenue. So trying to do that with very tight margins in a prediction market kind of style is really, really difficult. So I guess they're all kind of pushing all their chips into the CFTC regulation, because it's the only way they can survive.
It is an interesting regulatory arbitrage, isn't it, currently? I mean, you've got the state of Nevada, and who obviously, make a lot of the state income from gambling, going to war with a Kalshi, for example, saying you're kind of threatening that income, and Kalshi pointing to CFTC regulation and saying we are federally regulated, and Nevada saying we disagree, we're going to take this to court. I believe Kalshi are kind of quote unquote undefeated currently in their court dates, but something has to come to a head here, right, from a regulatory perspective. Well, I mean, we're seeing it outside of this specific space with the Genius Act. We've seen MiCA in Europe. We're going to have crypto asset regulation in the UK in 2026. There is a weird grey bucket that prediction markets seem to fall into, especially if they're on chain. Currently, they're sitting with the CFTC. What is your take about where you kind of see that evolving? I know it's very difficult to predict, and I don't want to put you on the spot and ask you to predict where it goes, but like just your general take on what's going on there.
Yes, it's definitely a good prediction market for someone to spin up to see, because there's lots of different options, and it might take a long time for us to get real clarity here, because as you kind of mentioned, it is going to be drawn out in different courtrooms around the US. Nevada is going to be, a big part of that. I think New York as well will take big parts in it, because you have to look back and see why sports betting was rolled out in states in the US, and it was very much pandemic has hit. We need more tax revenue to be able to fund all our public services. So sports betting and online betting could be a really great way to, generate that kind of tax revenue that we need to be able to fund schools and roads and hospitals and all that stuff. So now that could potentially be under threat by prediction markets, states have real skin in the game to kind of protect that tax take that they've had. So yeah, like there will be, lots and lots of different court cases in states, and it'll probably end up in the Supreme Court at one stage or another. Obviously, that's how it all kind of came about in the first place, with PASPA being rescinded back in 2018 and allowing states to kind of decide by themselves if they wanted to have sports betting or not. But having state by state is a crazy framework to kind of go down and to try and follow. No two states are the same. They have different what you can do, what you can't do. They have different tax regulations, different kind of thresholds, different KYC, different AML. It's just an absolute logistical nightmare. And what ends up happening is it kind of pulls up the ladder for innovation, because it's only the big guys that can follow all the rules and do everything.
Or people that can do the regulatory arbitrage, right?
Yeah,
where
yeah.
You say under, the way the CFTC is regulating event contracts, or however they're kind of stipulating it, we are now allowed in the entirety of the US, which is like, I really don't think people are understanding the gravity of that and how big, and as you mentioned, the kind of logistical nightmare of trying to onboard people state by state compared to just in a 300 million person country all in one go is a faucet that hasn't really been able to be turned on by anyone in this space before.
Yeah, absolutely. And that's why there's a huge push on this industry. I would have expected some of the big sports betting companies who've spent a lot of money kind of acquiring users to kind of fight this tooth and nail. They're kind of fighting on one side, but they're also building their own products on the other side. So they're kind of perfectly kind of hedged of, hey, let's fight this so we can maintain our number one positions, but let's also build a product on the other side just in case there is kind of approval that kind of comes through, that we can just go straight to that 300 billion, 50 states kind of in one fell swoop. But really, it's the end users who will benefit most from prediction markets taking over from, what is traditionally a sports book kind of based business. Fees that people give up are absolutely insane. Like, sports betting is a very profitable industry. But even if you gave a project to some MBA students of, let's analyze the business model of sports betting, there'll be some crazy stats in there for you, and I'll kind of walk you through those. So no one builds their own technology. Everyone is essentially leveraging different platforms. So they're giving 10% of their revenues to that platform. These are all just kind of guide numbers. They're high risk given the industry that they're in. So they're paying 8 to 12% in to payment service providers. And then they're leveraging affiliate networks. So they're giving anywhere from 30 to 50% of their gross gaming revenues to affiliates to drive traffic into their website. Then they have all this regulatory burden as well of being able to make sure that they're following all the rules and regulations. spend a lot of money on marketing and all that stuff. So there's about 60% leakage from what they're receiving in revenues to what they're giving out to, all the various different pieces of the puzzle that can make their product operational. So who pays for that? It's the end user. It's the old tariff kind of situation. This is a big tariff on end users, the way their model currently exists. Whereas prediction markets can, ease that burden a hell of a lot and make everything fairer. And everyone's looking to be, the single source of liquidity, because the more liquidity you have, the more streamlined the prices are, the more efficient it is, and ultimately the better product experience is for an end user, where they can get the best price coming in, and then if they need to cash out or want to cash out on the way down or the way through the game, they get the best price there, and they can exit the market in profit, hopefully. So there's huge things that are of benefit with prediction markets, and I'm excited to see how they will take shape. But I think it's not going to be a straight line to the right in terms of adoption and growth, and the legal fights will be pretty significant. So I'm happy here on the sidelines watching it and not having to be a defendant or paying big sums of money to figure out the clarity that we all need to kind of move forward.
I think that's a really good piece to leave it on, actually. And what you just said about how a traditional bookmaker is built in terms of inheriting features and tech debt or stacks from whatever provider it may be, compared to you could plug into something that is just inherent in terms of tracking trading activity, basically. And I think the blockchain element there is very interesting. Well, where can people find out more about you and LiveDuel?
So we're liveduel.com, at LiveDuel on pretty much every social network. We're currently live with our testnet product. It's kind of invite only right now, but that'll be kind of pushing out more and more public facing, especially as the new Premier League season, Champions League, La Liga, as soon as all the big leagues kind of come back in a few weeks. So if you go to liveduel.com, you'll be able to sign up to the wait list there, and then we'll be kind of rolling that out. I guess the big kind of shining star and guiding light for us is World Cup 2026. So there'll be a lot of cool things coming up between now and then from LiveDuel. So stay tuned.
And yes, you can find us on _Sporting Crypto on X, Sporting Crypto on LinkedIn. You can find me at Pet Barisha on X or Petrip Barisha on LinkedIn. If you're not already subscribed to the Sporting Crypto newsletter, please do so, newsletter.sportingcrypto.com. And please subscribe to the podcast, whether it's YouTube or wherever you listen to podcasts. Just remember, whatever we have said during this podcast is not financial, business, tax, or investment advice, and this content is for informational purposes only. Web3 is underpinned by crypto, and crypto is volatile, meaning you can lose money if you are buying these assets personally or as a business. Where we are recording right now, in the UK, the majority of crypto asset companies are unregulated. Thanks very much. Once again, we'll have more content for you soon.